The brutal truth about price action.
Fire, baby.
Price action. The art of staring at charts until your soul leaves your body. Probably the most important thing in trading, right after caffeine and regret. It predicts whether your account jumps, falls, or quietly bleeds out overnight. If you don't understand price action, don't worry. The market will teach you, expensively, the candlestick secret. Take a look at this big green candle. This is what traders call a Marubozu candlestick that towers over the entire market with no opposition in sight, no wicks, just pure, unapologetic buyer domination. That's not a signal. That's a war story. It means buyers looked at that price and said, "This is mine now." Whenever you see a candle like that, it shows pure buying intent, or a trap, depending on your luck. Remember, the past predicts the future, and your last mistake probably predicts your next one if nothing changes. Now, let's talk about something darker. The Jeepers Creepers of Forex, the smart money traders. The Forex rule of two candlesticks. This simplicity humiliates sophistication. Every chart has only two actors, the bull and the bear. That's it. The rest is just background noise. Before you start arguing, relax. Take all your fancy trading software, drag it to the table, and let's talk charts. Forget this is a market just for once, and think about the programmer who was paid to make the trading software. This software engineer tried to code logic into chaos. Computers understand ones and zeros, not fear and greed. You can't code human stupidity or market emotion, and a programmer cannot code chaos. Look closely. Every chart sings the same sad song. Same script, different cast. Billions spent, coders, engineers, caffeine, and broken dreams, all to build software that helps traders win, or at least look cool while losing. To understand the origins of the Forex rule of two candlesticks, I will link the previous video down at the comment section and at the end of this video. Now let us dive deep into the smart money creepers with an example. Wanjiru, one of the 9 Kikuyu queens, is a bullish smart money. She needs to push prices up. She is cautious when approaching a level held by Charles, who is a very bearish smart money. Wanjiru is so bullish but is not aware how far and to what extent Charles the seller can lower prices. Since she does not want to find out the hard way, she will dip her toes into the market via a broken bull bar. Queen Wanjiru has $1 billion of cryptocurrency in her book, with a B. She wants to play with around $100 million in the market. To test the waters and avoid a big loss, she buys 6 blocks of bitcoins each worth $17 million. These blocks are displayed as candlesticks. Let me show you the volume displayed on each of these bars. Each bar shows a market depth of 17K. Let us imagine that is the $17 million Wanjiru dumps into each bull bar to pump up the price. The first candlestick of the bullish movement closes as a small doji candlestick, despite the huge amount of money she puts into it to clear the selling liquidity. Since Charles has no interest to sell, Wanjiru now buys more bitcoins worth $17 million and some pocket change. She's got $34 million into the start of the bullish move. This second candlestick moves higher, finding no resistance since Charles is on the sidelines. On the third bull bar, Wanjiru now spikes the market with yet another $17 million, and this bar climbs the highest, clearing the recent highs, $51 million in. The fourth bar is tiny as she hesitates to avoid spooking the bearish seller into action. She is now wading into deep waters with $68 million invested. The fifth bull bar closes as a medium bull, despite having pumped $85 million into the market. Wanjiru is consistently pumping the same amount of cash, but the market shows lack of interest for higher prices, despite the volume on each bar holding its ground. The sixth and final bull bar eases off the buying pressure to a whooping $102 million, but fails to push prices very far north. Wanjiru is no longer interested in higher prices and relaxes. Charles is now interested in a sell. This level is what traders call a resistance. The bearish smart money floods the market via broken bears. The market is distributed and then crashed. This shows the careful planning that is used by smart money to move huge blocks of money. A genetic marker is basically your DNA's GPS tracker. It knows where you came from and who you're related to. It's the scent trail a vampire follows straight to your ancestors' necks. Like your social media history, every bite tells a story. Every drop exposes your lineage. And there's no delete account. Now, every candlestick carries its own genetic marker. It reveals force, direction, and intent. The DNA of market battle. Each one shows who's attacking, who's bluffing, and who's already running with their tail between their legs. Charles says that a candlestick ends when its color changes. The market's way of switching sides, the Forex rule of 2 candlesticks. Think of it like a building with multiple floors. To move up or down, you need a staircase or a lift. The Forex rule of 2 sustained. Focus on that staircase for a minute. The staircase is built from smaller, perfectly joined steps. In the same way, a broken-up candlestick is made up of smaller ones, micro movements stitched together to hide the true intent of institutional traders moving massive blocks of money. The illusion of chaos is just their DNA at work. On the flip side, when you have no time to flex your muscles, you pick the lift, or better yet, it picks you from one floor to the next. The lift acts like that large Maribozu candlestick, the single bull bar that engulfs the entire market with no opposer. Indicators, the lagging lies. See, most indicators, moving averages, MACD, RSI, stochastics, they all have one thing in common. They're late, like your broker when you need to close a losing trade. They use past prices to tell you what already happened. By the time your indicator screams buy, the market's already halfway to your stop loss. That's why price action matters. It's raw, it's real time, and it doesn't wait for permission. Momentum, the market's caffeine rush. Momentum tells you how fast your dreams are being built, or crushed. Slow climb, calm before the storm, sudden surge, that's FOMO fuel. Data points, the market's way of teasing you. Price never moves in a straight line. It pulls back like it's saying, come closer. I promise I've changed. Small pullback, bulls are still strong. Big pullback, time to grab your emotional support coffee. As the market toys with your emotions, it creates 2 types of trends, an uptrend and a downtrend, the Forex rule of 2 sustained. Charles says that there are 2 types of data points, the Forex rule of 2. As the market is trending up, it creates bearish data points, and when the market is being crushed, it creates bullish data points. Again, the Forex rule of 2 sustained. According to Charles, when you dive deep into each of them, you'll find that there are 2 types of bullish data points and 2 types of bearish data points. The Forex rule of 2 continues. As the market unfolds, it can only form full data points or half data points. The Forex rule of 2. During an uptrend, the market will form a full bearish data point as it rallies. On the flip side, the market will form a bullish data point during the downtrend, the Forex rule of 2 sustained. This chart shows both the full bullish data points and the full bearish data points. The Forex rule of 2 candlesticks continues on the next video. Like and subscribe. Comment below if you want to learn more about the full data points and half data points on a future video as you watch the origins of the Forex rule of 2 from the Garden of Eden.